Trust is something which we cannot sell. Alright? Trust is something that gets built over a period of time. Why does the mutual fund disclaimer speak faster than
They should invest with a certain firm.
We live in an inflationary economy.
Hello sir.
Hi.
How are you doing?
It's been great. Thanks for inviting me here. It's been a pleasure.
So thanks for coming. So before we start, I want our audience to know about you and your journey.
I'm a wealth manager. I've been a wealth manager for past 14 years. Started with a very humble beginning, it was an accident, I would say, a sweet accident to have. I opened my shop, which I would want to call it, which is Perfect Finserv today. It started as a shop where we didn't have a shop actually. So started selling insurance, and that's because I couldn't get a job and had to do something. Because when I returned from England, it was an emotional decision that I took, and I wanted to be with my parents, with my family. And I came to Calcutta and there was no job available for me. So I had to start and started selling insurance, and that's how it all began. 280 clients and manage family offices, we manage GNIs, and our asset book is just growing, and we are growing at a staggering 15-17% a year. So yeah, so that's me, a wealth manager.
आप एक बात कहिए that between a dreamer and an achiever, there's just a step of difference.
Yes. So, when you are dreaming something, you should also aspire and work towards it. Dreaming is something which gives you certain ideas. Perhaps you dream to be somebody, or you dream to become like someone. But then you need to manifest it and you need to work towards it. Then only there is a chance of getting success. I'm not going to say that if you dream to become something in life, and you work towards it, that doesn't guarantee your success. Then that will take you few steps ahead of others maybe, and it will take you closer to success. But then you have to do a lot of work and you will fail. And if you fail, you shouldn't stop. You should keep on trying.
Sir, आप एक बात बताएं that money is a sensitive topic, right? So, to convince someone that they should invest and they should invest with a certain firm, they are not familiar with, how can they trust them with their money?
Shouldn't go to a point where I have to convince that person to invest with me. I have always believed that it is my job as a certified financial planner or as a wealth manager. It is my job to make people aware of it, that there is something which you need. Investment करना आपका जरूरत है. ये आप मेरे लिए नहीं कर रहे हो, आप अपने लिए कर रहे हो. Today, if you are having some surplus money, if you do not invest, you put it in a bank fixed deposit, or if you keep it at home, we live in an inflationary economy. तो कल के डेट में उस पैसे से आप वो नहीं खरीद सकते जो आज खरीद सकते हो. तो आपको ऐसा कुछ तो करना पड़ेगा so that your future is secured. और ये आपकी जरूरत है, मेरी नहीं. My job is to make you aware of it. ये आईना आपको दिखाना मेरा काम है, ठीक है? Now, whether you decide to invest through me or you may decide to invest through someone else, that is not my problem. But if I am coming to you and I have given you the idea that this is something that you need to do, then more often than not, you would invest with me, right? That is how it works. Trust is something that gets built over a period of time, all right? We just make people aware of it, and the fact that we always try to cater to them, keeping their interest in mind. ये दिख जाता है, अपने बातों पे दिख जाता है, अपने काम पे दिख जाता है. आप शुरू करते हो और आपको लगेगा कि भाई ये जो बोल रहा है वो कर नहीं रहा है, तो आप ज्यादा दिन मेरे साथ नहीं काम करोगे. लेकिन जब आपको दिखने लगेगा कि जो ये बोल रहा है वही ये कर रहा है, उसमें मुनाफा भी हो सकता है, नुकसान भी हो सकता है, because we invest in capital market, we invest in equity. We cannot guarantee any return there, right? Sometimes we are dependent on the market movements, on the cycle. We may try and do a lot of analysis, but at the end of the day, there is a certain part which we cannot, no one can, right? And that is where go wrong. Many a times we go wrong. But then the intention was never to cheat anybody. The intention was never to, lose your money. The intention was always to cater to your interest. I never deviated from there. I may have made losses. My clients also suffered losses. I've always stood by their side. And that is where the trust gets built. नुकसान में आपको उतना दर्द नहीं होगा जितना आपको ये होगा कि नुकसान किस लिए हो रहा है.
सर एक बात है कि लाइक आज के जो जनरेशन के लोग हैं दे आर वेरी फिकल माइंडेड. Suppose they're planning that I'll want to invest and I'll invest for 5 years or 10 years down the line. But फिर होता है कि एक क्वार्टरली एक ड्रॉप मिला एंड दे आर लाइक कि नहीं मेरे प्रॉफिट सारे चले जा रहे हैं आई नीड टू टेक देम आउट. So sir, for them what you want to say?
See, there are two ways. Either you invest yourself, all right, you do it yourself, DIY, or you invest through a wealth manager or a financial planner. Now, when you start your journey, you should decide what you want to do. If you understand this market, if you understand investment, then by all means you can do it yourself. But ask yourself this question that are you competent enough to understand the market cycles and invest accordingly? If you are not, then you should believe or trust the person who is competent in that field. If you see that in a quarter your returns are dropping, call up the person whom you have trusted, right? Your advisor. Call that advisor. Take his advice. Maybe that's a discomfort that you're feeling because you see your fund or your money is going down. But then you should call your advisor and ask, why is it reacting that way? Then the advisor will explain it to you what you should be doing. If you should take the money out or you should be holding on. Because that you wouldn't know. What you are looking at is a very superficial thing. You are looking at a money going down. You are not looking at the reasons behind it. An advisor would tell you what are those reasons, right? An advisor may or may not get a chance to explain all this to you right at the beginning. Because there's a lot of homework that we do.
Yeah.
Now, when I engage with a particular client, how long does that engagement go? Let's say I take a meeting that goes for a couple of hours. But do you think it only takes 2 hours to build a portfolio? No. It takes days, months. It takes our expertise. Now, I always say that somebody gives me a fee. I tell that person, you're not paying me for 2 hours. You're paying me for 15 years and 2 hours, right? So whatever I learned in 15 years, I cannot explain that to a person in 2 hours. So what I'll give that person is something that he will appreciate, something that he will understand. But there are a lot of technicalities which I will not be able to explain to a person who doesn't understand finance.
Yeah.
So when you see there is a bit of discomfort that you're feeling because the market has gone a bit berserk, you should call the advisor will then tell you this is because of this, but you don't worry about it. So this is what you should do instead of taking the money out. Being fickle-minded is all right. Being concerned about it is absolutely all right. After all, it's your money. But you shouldn't do the right thing.
Plus, there are many scams like
Yes.
pyramid scams. To scam some companies go bankrupt, like ये trust build करना is very difficult.
It is difficult. And it is difficult to trust someone also.
Yeah.
Right? So while we do our due diligence as a wealth manager, as an advisor, I do my due diligence on the assets where the investment should go. Similarly, a person who's investing through me should also do this due diligence. He or she, today we have social media, all right? So, any advisor, you will find my LinkedIn pages, a lot of followers, they follow me. Most of them are my clients also. And so when they started getting associated with me, when they started investing through me, before that, they followed my LinkedIn. It took a good 1 or 2 days to figure out what am I doing, have I done so far. So you have to do your due diligence as well. So you need to. So if you are a smart, Gen Z, millennials, we are all people who are using smartphones, right?
Yeah.
And we are smart enough to understand that whether a profile has been just floated few days back or has it been there for long. Is there a trail? For somebody like me who has spent 15 years in this industry, it is not that I have just floated my profile today.
Yeah.
I have done things, I have posted things, there have been comments that came maybe 10 years back, right? You'll find that. If you do so that is your due diligence. You should go through a profile, not superficially, go through it, deep into it. What has this person achieved?
Yeah.
What are people talking about it, right? That will give you a certain idea. I'm not saying you're not going to make mistake after that. People make mistakes, right? But then you should do your due diligence and then certain calls will go wrong, right? Scams, if you talk about the scams before, there will be scams after, right? Scams will keep happening.
Yeah.
And regulatory bodies are there to see that it doesn't happen. But then it is always a reactive mechanism. So we cannot anticipate that there is this kind of a scam that may happen. We cannot anticipate that. No regulator will be able to do that. Regulator will always react to it. Right. So you need to do your due diligence as well. That's why if you look at regulators like RBI SEBI, IRDA, they always do this awareness campaign where they keep on talking about what are the things that you shouldn't do. Like RBI runs this campaign that you shouldn't share your OTP with anybody, right? So SEBI will share this. You just mentioned that crypto can be a scam. So when you see that this is a very high risk investment, do not put all your money there. Just put a small amount, see how it's going. And then if it is going well, then means it's not a scam. Then you go and invest further. So diversify your risk. And that is what we do in investment also. When we do our due diligence, sometimes we also go wrong. That is why when we take your money and we invest in multiple assets, we do not invest in just one asset. We invest in multiple assets. I think I have gone wrong 50% of times. My clients have always made money. So when I made those wrong decisions, I identified that the decisions were bad. I took the money out from there, booked my losses, went into other assets. But while I was doing that, 50% of time I have done the right thing. Also, those assets have started generating returns. Yes. There will be some losses. I'll book those losses and put it back to some better asset. Right? This is diversification. Had I just put everything in one asset and the asset is going down, so my clients will lose me. I mean, they'll lose temper and just go away. I will not have a profession. Right? That is how. From someone 21-22 साल का है to 50-70 years, can you identify कि कौन से एज ग्रुप के लोगों को कौन से एसेट में या कौन से म्यूचुअल फंड में या कौन से इक्विटी में लाइक अदर फॉर्म ऑफ इन्वेस्टमेंट्स जो है कहाँ पे किसको क्या डालना चाहिए एंड क्यों? I'll give this answer in two parts. One is how your journey as an investor should start. First, you should start saving. Only then comes investment. So when you save, you should use the traditional saving mechanism like fixed deposit. So when you start your journey as a professional, you start earning, active earning. Start building your emergency fund first. Start saving. Because that is a habit. Saving is a habit. You got your first salary. How much of that is going to be saved? That is a habit that you build over time. Once that habit is built, you will see every month when the salary hits your account, the first thing that will come to your mind is last month मैंने इतना सेव किया था इस महीने मुझे इतना सेव करना है. Now that means your habit is built. Now, ideally, if you are a salaried person, you should have at least 6 months of your expense, basic expense, as an emergency, and that should stay in fixed deposit and liquid mutual funds, very safe. Then comes investment. Now you are talking about something that you will build for future. Now, depending upon your age group, it's not only your age group, it is about your goal. How long do you want to invest for? So let's say you have a goal to go for a vacation to some foreign country and you want money for that. Or India, a vacation, a domestic vacation, you want money for that. And you want to do that in next 5 years. So that means your horizon is 5 years. If your horizon is 5 years, then ideally your assets should not be very risky. You should look at mutual funds, index funds, large cap funds, which are very safe. Invest in top 100 companies only, not go beyond that. Because is that those companies which are beyond top 100 companies bad? No, they're not. But their returns will probably be a bit volatile. So when you have a goal, let's say, which is 10 years, 15 years, right? You go for mid cap, multi cap, start taking small cap if it's further, right? As a young professional starting your career, you are in the age group of 25, you want to build a corpus for your financial freedom, because people don't talk about retirement these days. It's about financial freedom. You want to be financially free by 50. Let's say 25 years. You can take certain high risk bets. Start with mutual funds, because if you are not accustomed to capital market, the safest way you can get into capital market is through mutual fund. Do not try to, invest directly in stocks immediately. Start building your corpus there. And I've always believed that invest in mutual fund for at least 5, 7 to 10 years. Why? Before you get into direct stocks and before you start building your stock portfolio. Two reasons. One is 10 years is a very long time. You're going to build a corpus for yourself, which is going to be supporting you. When you get into direct stocks and you see the volatility, you will probably make few losses. You will not completely go out of the market because there is a corpus that is there. And while that corpus is getting built, you are getting accustomed to the market cycle. You will understand what happens, because in 10 years time, there will be a market correction. You will see how correction feels, how it impacts your portfolio, and it will build you, it will mature you as an investor. So there's a lot to do with behavior, right? So that will build the right behavior that an investor should have. Then when you have spent good 5, 7 years through mutual fund, And during this time, you'll be talking to so many people, so many advisors, reading so many things. And then you start building your portfolio in stocks. But then you'll be having some ideas. It's very difficult to get a portfolio manager for only stocks. You will get a lot of brokers who would be, helping you in executing it. Yeah. But getting a right stock portfolio manager is very difficult because they're very expensive. Yeah. You cannot have just few lakhs of investment and you cannot hire a portfolio manager. You need at least 50 lakh to 75 lakh rupees, right? Only for stock portfolio. Now that's a good amount of money. First of all, you need to have that money, right? Then there is a lot of buzz about unlisted stocks or private equity. Now that is something which you should do. That should be the final game, right? First mutual fund, then you build stock portfolio, then you go for those private equities, AIFs and all. Because if you look at AIF, you need minimum 1 crore. You cannot do with 1 crore because that's the SEBI norm, right? So why do you think SEBI has kept that threshold of 1 crore? They want matured investors. They do not want rookie people to get in because you're going to burn your finger. So private equity is what? Private equity means you will not get liquidity. Once you buy, you will have to hold on to it. You cannot sell it. Let's say, for example, you buy some of these startup. You invest in a startup. You cannot get the money back unless and until the startup matures, goes to IPO, or it gets further funding. Yeah. Your money is stuck because your money is not with the promoter. Your money has got invested in the company, in the business. So unless and until that business generates return, you will not get your money. You as an investor need to understand that. For that, you need maturity. For that, you also need other form of corpus. You cannot be banking on just one. Yeah. You will have some other corpus which will be in the form of fixed deposit, mutual fund, which you can liquidate at any given point, right? Yeah. Now, when you talk about somebody who's in his 40s or mid 40s, they generally plan for retirement. For them, there are very few options. They do not have all the options. For them, they have to be a bit cautious. Because when you are talking about somebody who's 45, they'll have a lot of response. 45 means they have got kids who are about to go to college, perhaps. Yeah. They are still in high school. Yeah. So there'll be a lot of responsibility. Then in Indian culture, at least still it prevails today, every father would want to get his kid married. Yeah. Right? 45, your retirement would be, the average retirement is 55, 60 these days. So 10, 15 years. Then you have only flexi cap, large and mid cap, maximum multi cap. You cannot go completely in small cap anymore, right? And then you can build 20% of your money can be put in some sectoral funds. But when you play sectors, be very careful, and ideally you should do it through advisor who understands sector. Because sectoral play is something you need to be cautious, where you need to monitor your portfolio. And then when it comes, when the sector plays out, you need to also get out of the sector and get into something new. So that is how you should be investing. So one is building behavior. The other one is playing the duration. So these are the two parts. First, you build behavior. Second is you play it according to the duration. Right. So, sir, for an initial investor, like someone who just want to get started, the first thing they will learn about market is that buy what you see. It's a very common say that buy what you see. Suppose you are eating a Nestle coffee, then invest on Nestle. Yes. But how much it's accurate for real investment? It is not a bad idea to buy what you see or buy what you use. But the other question that you should ask is that what valuation? Yeah. Now today I use Colgate, yeah, right? So Colgate is a listed company. I can go and buy a Colgate stock. But at what valuation I'll be buying Colgate? That is something that where you need expertise. Yeah. I'm just a regular user of Colgate. I use the toothpaste. I like it. And it's all fine. When I'm investing in it, in that stock, I need to understand the company's movement, the stock prices. Do I know how to do that valuation? If not, then I should go the fund route. I should find an advisor. I'm not saying go blindly to mutual fund. Find an advisor who is going to advise you on that professionally. And when I say professionally, I'm asking you to go to a person who's going to take responsibility of his or her advice. Now you go to any of your known person and you say that Colgate का stock ले लूं क्या? Colgate तो हर रोज मैं use करता हूँ. Colgate का stock ले लूं क्या? Now that person may not be having that expertise of valuation. And that person might just advise you, हाँ ले लो. Sure. Now think about it. When you take the stock, if you make loss, can you put that blame on that person? No, because that person doesn't have any contract with you, right? आपने पूछा, उन्होंने बताया. Question is, can you hire somebody who is going to advise you on buying stocks and he is going to be competent enough to do that? you can. But then, like I said, those advisors come at a very high price, right? So what is your investment corpus? How much you want to invest in Colgate? How much you want to invest in Colgate?
Suppose say 10 lakhs.
10 lakhs, 15 lakhs. You want to invest in just one stock, which is Colgate. First of all, that's the wrong thing to do. You should build a portfolio. When you invest in stocks, you should build a portfolio of at least 10 to 15 stocks. Now you mentioned about 10 lakh. I'll give you based on present market scenario. You cannot hire a wealth manager with a corpus of 10 lakh because somebody who's competent enough to do valuation of stock, that person will not manage 10 lakh rupees for you. Who is going to be that person? Now the question is, does that mean that 10 lakh? Because mutual fund managers, they manage a pool of fund. So your 10 lakh will get added to that pool, which you will manage. So he's managing a pool of, let's say, a particular fund which has got a size of, let's say, 1,000 crore. Your 10 lakh will get added to that 1,000 crore and it will be managed in the same manner the rest of the money is getting managed. But if you want somebody exclusively doing it for you, 10 lakh rupees is too small now. For that, at least you need 50 to 75 lakh rupees or maybe a crore. If you have that, you can buy an advisor's advice and have a professional advisor doing advisory for you. But if you don't have it, then the next route is mutual fund, which is safer. Which is why I'm saying this is the reason that you should go to mutual fund.
So can you give us 5 reasons to choose an investor?
Choose an investor or choose an investment?
Choose an investor. Like you said कि अभी मार्केट में बहुत नॉलेज है बट इतने नॉलेज के साथ लाइक कंफ्यूजन एक होने का ही बात है कि ऊपर से बहुत लोग हैं कि वो गूगल में बाय कर लेते हैं अपना लाइक रेटिंग्स वगैरह सो लाइक हाउ टू चूज एन इन्वेस्टर लाइक हाउ टू चूज अ पर्सन कि जिनको हम ट्रस्ट कर सके
Nowadays, not just Google. You've got LinkedIn, which is a very professional thing. But yeah, LinkedIn is a place where you do not find people buying things without, it doesn't get manipulated. So LinkedIn is something where you build it over time. So today, if I want to, talk about something that I haven't done, it is very difficult to do in LinkedIn because even if you put a post, the post will go on today's date. You cannot put a post 10 years back, right? You cannot do that. So that is where the due diligence comes. That how the person is saying that he has been in this market for 15 years, then let me see what he has done in 15 years. So that is how you do your due diligence. Second is when it comes to any decision making, not just about money, any decision making, do not go by the bandwagon. Do not go by the noise. Try to cut the noise out. Try to find the rationale behind your decision. अगर invest करना है, why is it that there are so much of noise के पीछे क्यों भागना है? नॉइस को पहले कट आउट कर बेसिक्स फंडामेंटल पे फोकस करते हैं व्हाट डू आई वांट फ्रॉम दिस पर्टिकुलर डिसीजन आज मुझे एक टूथपेस्ट खरीदना है एक शावर जेल खरीदना है एक शैम्पू खरीदना है डू आई ऑलवेज नीड टू गो बाय व्हाट पीपल आर टॉकिंग अबाउट इट आई नीड टू गो फाइंड द राइट कंपनी see what are the compositions. So when you buy your stuffs or regular stuff that you use, do you always go by what 10 people are saying? You're going to buy a piece of cloth for yourself, let's say, and you want certain things. You want comfort. You want to be you shouldn't want the color to fade and this, that. So these are certain criteria that you have. Based on that criteria, and you want to do it on a company which is trustworthy, who's actually selling cotton when they say it's cotton. They're not mixing it with polyester. So then you take those information. You go to a cloth shop. You go to, let's say, e-shop for that matter. You check the tag. ये 100% cotton है या 50% cotton है. अब देखते हो. Same thing goes for investment. You should know what you want from that investment. Because if you ask me that I have got 1 lakh rupees today, what I should do, I'll tell you go spend, enjoy your life. That is the first thing that should come to your mind. Why am I not doing it? That means there is a delayed gratification that I want to do something with that money later. This is why I'm investing. So now then I should know what do I want from that investment. Based on that, I should make my decision and do the due diligence. Cannot simply say that somebody is 5-star in Google and go through it.
And what are the things one should look while investing on mutual funds or any form of investment? Like what are the key datas or key factors one should
First
look
of
at?
all, if you are investing in mutual fund, you should, like I said, there are multiple mutual fund schemes available. You should align your need to that mutual fund scheme. So if you want a high risk, high return, then you should go for such kind of funds, which is going to give you a very high return. You should go for a multi-cap fund or a small cap fund or a mid cap fund. If you want a stable return, not a very high return, go for a large cap. If you want certain amount of principal to be protected, certain amount, I'm not saying entire principal protection, certain amount of principal to be protected, then you go for hybrid funds where you have certain part of investment which is happening in bonds. So you should align your need to those funds. That is the first thing and the most important thing. And second is you check what is the risk factor available. So that is a beta. So beta is one very important, beta and standard deviation. These are two very important parameters that you should check. You should look at the rolling return, right? Look at the rolling return just to understand the potential of this fund. So when I'm looking at a rolling return, I just want to get an idea that on a good market, what is the potential? Doesn't necessarily mean that it will be the same return that I'll get. I understand the potential. So if Nifty has given 12% return, this fund has given 15% return. So that means this fund has a potential to beat Nifty by somewhere around 3% in the future. Doesn't necessarily need to be exactly 3%, but somewhere around that. Now that gives me an understanding. So these are the 2, 3 parameters that you should. Other thing that you should look at is who's managing fund manager. Yeah. What has that fund manager's journey been? Because ultimately he's the one who's going to manage your fund. So you can go to that extent and see what has been his track record. So that's another thing that you should add. Suppose there's a person, he has started investing, like he has first learned, he has spent years learning कि market कैसे करता है, क्या चीजें work करता है, what are the technical analysis, what are the fundamental analysis, and then they start investing. First they will obviously कि कोई guidance होगा उनका, but जैसे guidance छोड़ रहा है कि we are leaving that guidance कि नहीं अभी we are confident कि हम खुद से कर सकते हैं, and they do the technical analysis, but at the same time not just technical analysis is the only thing that works. Like जैसे tariff का case हो गया, that everyone was saying that market will go up, Nifty will go to 26,000 at that time, like around March, April of 2025. And उस time पे everyone was saying कि ये 26,000 में जाएगा. But instead, एक दिन there was 1,000 points of gap down. And ये कोई predict नहीं कर सकता था because it happened because of tariff. So sir, ऐसे situation में how to keep your mind calm, how to like avoid stress and like move on. It is about a behavior. So it doesn't happen overnight. You need to build it. And that's why I said that do not get into stock directly. Start building it in mutual funds. So that is the behavior I was talking about. I was mentioning that one should spend good enough time in mutual fund. That is what I was talking about. So ये टैरिफ का जो केस आप बता रहे हो और ये शार्प गैप डाउन जो आप बता रहे हो, now the first time it happened in Indian market or any market. It happened before and it will happen again. Okay. We had similar slowdown around 2018-19. Nobody anticipated that. It happened. From there, market went up. We had COVID. Very few people anticipated COVID. I think not even a handful of people could have anticipated it. Right? So that's a black swan event. You cannot anticipate such things. Okay. The market went down sharply, and it again went up. The question is, how to keep your calm will only come from knowledge. And it was playing out. Like I started my investment journey much before I came into this profession. So by graduation, I was a chemical engineer and I was working with Reliance Jamnagar in the refinery, right? So I started investing at that point. Okay. And I started investing in 2008 January and the market fell after that. So, and at that point, I had very little idea about market is, right? But then I didn't do anything. I just, because there was something that I learned back in the times by reading a lot of books, that when there is a market volatility, you shouldn't react unless and until you know what's happening. And at that point, I was holding some investment in mutual fund. And I trusted the mutual fund manager because I did my due diligence that this manager has done well, stuff like that. So I put my faith in that person. I didn't react because I didn't know exactly what's happening there. Okay. A lot of people were having a lot of fear. I was also having a fear because I was a first-time investor. Then I didn't react to it. I said, okay, fine. A lot of people are there. Then there are some professionals. Let them handle it. And then I came into this profession. I came into this profession right after that. There was another slowdown in 2012, taper tantrum. You would know. I mean, you read history, you will see there's been a taper tantrum. And market was considerably slow at that point. Then happened 2018, then 2022, I'm forgetting COVID because COVID happened and market came down sharply and again went up. So it was just about a couple of months, right? In 2022, when Russia-Ukraine happened, market again went down. So over a period of time, this is the habit, this is the behavior that has built over time for me. That today, when the market went down by 1,000 points in between, I didn't react because I know why it is happening. It's happening because of tariff, which is a very momentary thing, right? It is not going to last forever. Tariff happened much before. Tariff happened when I was in school, India invested the nuclear power. in Pokhran, right? So when that happened, US came up with a very harsh, tariff with very harsh embargoes, sanctions, and everything. Market went up from there. We had Kargil War. Think where Sensex was during Kargil War, and think where Sensex is today. So volatility will always be there. Volatility is a part and parcel of equity market. Right? If you want to make significant amount of return through any asset class, you will have to go through certain volatilities. It's just that your behavior towards it will ensure that you stay calm. And that behavior is something that you have to build over time. So initial phase, when you are not sure about it, you should trust on somebody who knows this game. That is why I always talk about mutual fund, that it is actually a safety net for you because you are not on your own. There is somebody who's a professional who knows his game actually managing money for you. This is someone who went foreign for education, then you came back to India and then started from the very base. Like, how was that journey for you? It was, when I look back, I would say it was very enriching and very rewarding, I would say. Satisfying, definitely, because a lot of myth got broken in the process, right? But the initial journey was tough. You do not get opportunity from everywhere. There are only some handful of people who would support your cause, who would help you, who will come to give you some kind of support. So the journey, like I said, was a very steep learning curve. Okay, I learned a lot, learned how this entire profession needs to be approached. So I made my mistakes, learned from there. It has been a very enriching and satisfying journey. That's why it's not because a certain amount of success or whatever. That is, a lot of people are a lot more successful than I am. All right, so I'm probably nowhere in front of them. But it is satisfying because I made mistakes. I learned from those mistakes, and next time I didn't make that mistake. So that is why it is satisfying. So if you go back in time and start from the very beginning, what are the few mistakes you will want to avoid? I think the first mistake is trusting a wrong person. I can say that if I fall, let's say, wherever I am, if I fall back to where I was in 2011, it will not take 14 years to reach where I am today. I will probably reach the same position in 4 years' time. Because that 10 years is something which I will avoid because that's now you can understand 10 years of mistake. So if I doesn't mean that I have made mistakes for 10 years. No, I have made mistakes from time to time. But then those mistakes taught me something where I'm not going to waste 10 years to reach where I am again today. So I understood valuating companies much better. It is not just need to understand, it is not just the annual report or the Excel sheet that tells everything. It's a lot beyond it, and that only comes through experience. Somebody tells you that, no, we are good. Nobody's going to say that. They're going to say, I'm good, right? Other thing is, please share your experience with the first ever client. That first ever client was very kind enough to give me business because I was all over the place. I was shaking and I was fumbling. And when he asked me about, I was selling insurance to that person. I was getting him best in one insurance product. Okay. And I was prepared for the pitch. But then when I went into his office, I figured that I don't know anything, right? And I was shaking, I was fumbling, and he offered me, he was very kind, like I said, he offered me glasses of water, all right? It was not just one glass of water. It took me a few glasses of water to calm down, and he's like, okay, calm down, all right? You're going to get there, so tell me again. So start your pitch again. So he gave me multiple options, which you normally generally don't get. You go to a client, you either convince that person or you don't, right? But then this person will be kind, and it's still my client. It's still my client and a mentor for me, right? So the great learning that I had from my first client, yeah. Okay. And what's the most like frustrating experience of your journey? Frustrating as in, I would say there were multiple experiences where we're expecting the market to go up and it was not happening. And like I said, that no matter how much analysis we do, beyond a certain point, we are also bound to accept the reality. So those were the frustrating moments where the market is not really going and should go up and it's not going up. So, and those review calls, when you meet a client whom you say that, okay, this market is about to go up, you give a projection and projection is not just happening, it becomes very difficult when you explain the person the reason and the person is not appreciating it. It becomes difficult, it becomes frustrating. But I do not, over the years, I have learned not to take it too hard. All right. Always, when a person is not buying your reason, for a moment, if you're getting frustrated because of that, for a moment, put yourself in that person's shoe. Would you have accepted this had you not been a professional in finance? Would you have accepted these reasons? The answer is maybe not. And when you do that, you will be able to appreciate that where that person is coming from, his anxiety, right? And that helps you not to get frustrated. And after 15 years, you really don't take all this in heart. So it's there. You know that deep in your heart, you know you're not doing the wrong thing. You are just doing the right thing, but sometimes the right thing is not happening at the right time. That's all right. It's okay. Mind has every right to be frustrated on you, every right to be in questions, tough questions, and it's all right. It's fine. Yes, it happens.
So for our next segment, there are subjects,
Okay.
and you have to pick one of them. Actually, you have to pick few of them.
Okay.
And like answer the questions. Some can be very weird.
Okay.
Some can be interesting.
Okay. Why does the mutual fund disclaimer speak faster than? It's the same reason why cigarette pack will have something written very small letters and stuff. No, it's not to hide anything from them, but then it is something that is statutory requirement. And when you are promoting a certain thing, you necessarily don't need to talk about the negative things, right? But then it's there. So yeah. So that's next one. My SIP runs for 30 years. Will it attend my it may not attend your retirement party, but will certainly fund your retirement party. Mutual funds are subject to market risk. Can I subject market to my risk? Yes, actually, because when you choose mutual fund, it is about your risk appetite. So it is subject to the risk appetite that you have. So you choose mutual fund. So yeah, so that's okay, you can. Which shines more, gold or your portfolio after a bull run? Your portfolio after a bull run. Because, and it has been, data says it in last 30-35 years, equity market after a bull run, equity market has generated at least 4 to 5% more return than gold. Yeah, it's true. If a debt fund and FD both offer 7% returns, who actually earn more post tax? Well, right now both would be same. Earlier it was different. Earlier means for 2023 March there was a taxation, which was a tax benefit which was there in fund, but it's not there anymore. So yeah, so it's the same. Mutual fund goes down, can I press Control Z? No, you cannot and you should not. Right? When the mutual fund goes down, you should hold on to it because it is going down for some reason. Try to find out the reason. And if the reason is something that is alarming and you think it's not going to change its course in next 5-7 years, then you should exit and invest the money somewhere else. If you are investing in that only happens in sectoral funds where you are stuck in a sector which is not going to grow or not growing at all. But if you are investing in sector agnostic funds like cap, multi-cap, mid-cap, large cap, then try to find out a reason and then hold on to it. It may take 6 months, it may take 1 year, it will come back, of course.
Now we will go for our next segment, which is Never Have I Ever.
Okay.
Are you excited for it?
Of course, yeah.
Never have I ever invested because of a FOMO.
I've never invested because of a FOMO.
Never have I ever checked my bank balance and said, where did all my money go?
It happens many times because I invest and then I forget. And then I figure out I don't have money.
Never have I ever given a financial advice to someone who didn't ask for it.
I gave very few times initially, but then I learned my lesson and I didn't. But yeah, I have gave few times, yes.
Never have I ever misinterpreted a client's request or requirements.
Yeah, so I can't say never. I have done it in the past. Again, it was a learning process, so I was making mistakes. Yeah.
Never have I ever closed a deal in an unexpected place or situation.
I have many a times closed a deal. There were dead deals at times. I have closed it. Yeah.
Can you share an experience?
Yes, there was a client, still is my client, I'm not going to name him. Of course, if he sees the video, he will know that it's him. So when I went into his office for the first time, he didn't even give me a meeting when I went there for the second time. And he said that, you can say a lot of things, but I'm not going to invest in you. After 1 month, he was my client.
Wow. Alright. Never have I ever celebrated a win with an impulsive slur.
No, I do that. When I celebrate, and my team would say that when I celebrate, I don't think twice. And I always do it with my team, with my close ones. I don't stop myself, I splurge. But then, there are certain things that you got to do. And especially when I'm running a firm, we have a small team and they're like my family, right? So I don't think twice. So let's say we go, we party, sometimes at least 2 to 3 parties we have, major parties we have with my team members. And when we go there, there's no two ways out. Whatever you want. But then when we very hard.
That's so nice. Okay, this or that. Lump sum or SIP?
Both, but it depends upon your cash flow actually.
Gold or real estate?
Gold.
Why?
Because it is easy to hold and it is easy to liquidate. Real estate, of course, nowadays you can, with REITs and all you can, but then, yes, I would say gold.
High risk, high return or low risk, stable returns?
High risk, high return.
Okay. Digital payment or cash payment?
Digital payment.
Growth or stability?
Growth.
Innovation or tradition?
Innovation.
Analysis or intuition?
Analysis.
Hand-on leadership or
Leadership.
business loan or personal loan?
Business loan.
Okay. UPI or debit card?
UPI.
Emails or WhatsApp groups?
Sorry?
Emails or WhatsApp
Emails.
groups? Okay. So, luxury spending or mindful budgeting?
Mindful spending.
Entrepreneurship or corporate life?
Entrepreneurship. I have lived it. I have never been into corporate, so entrepreneurship.
Alright. So, a quick question. What is money?
Money is honey.
One financial habit one must have.
Save before you spend.
Okay. Loans are?
Good as long as you're disciplined.
A financial mistake make people too often.
They buy things they don't need with money they don't have.
Credit score in one word.
Credit score is alarm. It's an alarm. Good, bad, whatever, it's an alarm.
Your go-to investment?
Equity. Any day.
Okay.
Equity mutual fund, you would say.
One financial myth that annoys you the most.
That I will save for my hospital bills. You cannot save for your hospital bills. Hospital expenses are at an alarming inflation rate of 20%. You have to get your health insurance. There is no two ways out.
Success smells like?
Coffee.
Alright. Your leadership style in one word.
Democratic. Very democratic.
Client you love, straightforward or overthinker?
Straightforward.
One thing you wish clients understand sooner.
That we are not magicians.
If you could ban one money habit forever, what would it be?
Lending a person who's already in debt. Do not lend that person. You are actually pushing him to death.
Right. Thank you so much for this podcast. It means a lot.
Pleasure. Absolute pleasure.